Good afternoon, everyone. Today is Friday, the 9th of March, 2012. This is Brian Shannon from Alphatrends.net. Let's take a look at what this market did this week. Interestingly enough, it was the Russell 2000 and semiconductors that were the weakest at the beginning of the week and were breaking support levels. But if you look at the closing numbers for the week, Russell 2000 was up 1.6%, semiconductors up just a little bit more than 0.5% for the week, and the S&P kind of flat in there. Anyways, oil had a strong week as well. We'll take a look at the charts because that's where we can describe the picture a little bit better. If we take a look at that 65-minute time frame, as we've been observing this trend line from the December lows, and of course that got broken earlier this week. As I was saying, that a trend line broken doesn't mean that we're reversing trend, but maybe we're going to get a little bit of correction, at least through time, if not price. And we had a little bit of a price correction, but it didn't last very long. We had the gap lower, of course, on Tuesday and went out at the lows. Wednesday it gapped higher again on Thursday, and we got back above that important level of support at that 135.80 basically after holding the bigger level of 134. So right back up to the top end of the range, and again we were up for the week. We've still got a bullish looking weekly chart. The daily chart is still bullish. As we say, when we have the trends that aren't aligned, it pays to be cautious during this period, and then it's a question of when do you get back in. Is it when it gets back above that 5-day moving average? Well, for me and subscribers to Alphatrends, we were just focusing on individual stock setups because there were lower risk opportunities in there. But the S&P 500 obviously helped by coming back up, and now I think next week that 136.5 is going to be a key level to watch once again, and then just below it, obviously at this level here, about 135.70. So 136.50 is going to be important next week. We're still in an uptrend on the daily time frame, still looking, innocent till proven guilty is how we want to look at it. And same goes true for the Nasdaq. It's amazing how each time we get a pullback, some people are so quick to call the top. It's good to get cautious when we have price weakness in the short to intermediate term, but to call a top is foolish. It's no different than all the tops that have been called in Apple, and everyone's been calling. Here they were saying this was a double top, and I'm sure people are saying it again that this is a double top. They said it back in January, but Apple continues to perform real well. Obviously, it had been holding that rising 10-day moving average, barely made it down to the rising 20-day moving average, and the buyers got right back in, and it's actually looking, I think it's at a closing high, I'm not sure, but very close to a closing high. And as people have been trying to pick the top in that, they've also been trying to pick the bottom in natural gas, and back in here people were calling that the bottom. And again, when you have a declining 50-day moving average, get it guilty till proven innocent. Those rallies are typically going to fail in a downtrend, just like the sell-offs with a rising 50-day moving average are typically going to fail to hold that market lower as well. So this is the Russell 2000, and we've been looking at we have this trend line, of course, and excuse me, we touched upon that in the 50-day moving average this week. I'm not a fan of just buying at a trend line or a 50-day moving average. It obviously worked this time, but we also had what we were looking at was the Fibonacci off of the December lows, and that was it came down right in there to a 38.2% retracement. So what we're looking at is from these lows in December up to the recent highs, we pulled back to the trend line, the 50-day moving average, and 38.2% retracement. So often when you have an alignment of technical of time frames and things that people are looking at, such as moving averages, trend lines, Fibonacci, all coming together in the same place, then it often does provide a level of support, because people are either deciding not to sell short because they're at the 50-day moving average, or deciding not to sell their longs at the 50-day moving average. Same psychology goes for the Fibonacci and for the trend line. So we have a lack of supply, and then other people start to say, well, hey, I shorted it on the break of that important support that was so obvious at 81. Maybe this is a good place to cover at the 50-day moving average. Maybe it's a good place to cover at the trend line or at the Fibonacci. So the point is that the psychology of the lack of supply and a little bit of nibbling from those short sellers starting to provide the support as they come in and bid for it, that brings other people from the sidelines. Cash on the sidelines says, hey, it does look like it's finding support there. Let's redeploy some of the money we we took out of the market at a break of 82, 81, and get in at 79 and a half, and we'll see how the market goes, and raise our stops as the market tells us to. So that's kind of the psychology of how this is formed. Now what we want to see next week, I think, is obvious, is that we want to see this 81 level continue to hold. It's good to see it got back above there this week. Now we're back into what was the midpoint of the range, the prior range, and the highs up near 83.20ish. So the Russell still looking a little bit neutral intermediate term, but within a larger term uptrend. So I think you want to be innocent, looking at it as innocent until proven guilty, which means look for the long setups. Don't look for the shorts. If you're going to short it on the down days when the market is below a declining volume weighted average price, and have a quick strategy for getting out of it. Anyways, back to the NASDAQ, we can see that all year this market had been holding this 10-day moving average really well on a closing basis. We gapped down to that 20-day moving average, closed basically right on it, and then bounced from there. So right back up to the high end of the range for the NASDAQ, and just really continuing to behave the way a bull market does. We held the 63 level. Now again, 64 and a half, basically 64.30. That's the level we want to see hold early next week. The semiconductors, as we had mentioned, they came down to that 50-day moving average as well. When we look at the Fibonacci off of the December lows, you can see it came pretty close to a 38.2% retracement, pretty much dead on 38.2% retracement, in fact. And we're also holding this, this longer-term trend line that would have been the next target if the 50-day moving average failed to hold. But even this market got back above that key level of $34 a share, and now we've got 34 and a half has kind of been a little bit of a fulcrum point too, being resistance a few times and then support a few times in here. So next week I think we want to see this market hold $34 a share once again. And the financials, these guys came right down to the bottom end of that range. We've been talking for the last several weeks about $14.40, and that was actually the low this week. It tagged it dead on, and if you're one of those people who believes into buying at support, it would have been a fantastic trade. Again, that's not my preferred way of looking at it. I like to look at the market and say, well, we're down to an important level, let's see if this holds, and then decide to get into the market. Well, it got back above that 1470 level as well, and in doing so got back above the 5-day moving average. So I think we're back to 1470 becoming an important level for next week. We're at the top end of this range. The market's really, for the last 3 days in a row, we've had at least 2,000 advancers on the New York Stock Exchange and about 800 or more or less decliners. So we've got strong participation. The market kind of faked a lot of people out and kind of shook the trees a little bit, and it's okay to get shaken out of a position, but look to get back in or have conviction in the longer term trend if that's the time frame that you trade. It depends on what time frame you trade, and that's going to be different for everyone. So anyways, I hope you had a good week in the market. Thanks for tuning in, and have a good weekend.